we are here for the last session of the day, and we could not have a better closing for our theme, Europe versus the US, than a fireside chat between Presidente Monti, with his leadership role in Europe, and Richard Parsons, with his several leading roles in the US. Our facilitator is Mario Platero. Mario is a long-timer and well-known resident of New York City, famous journalist and writer, US editor for Il Sole 24 Ore, and leader of the famous radio daily talk show American 24. Richard Parsons is one of the most successful CEOs in the United States. He has had a wonderful career spanning from government to the media, financial services, and now to the sports sector. Richard, at the young age of 26, followed the Vice President Nelson Rockefeller to Washington. He then rapidly ascended as president of Time Warner and led the largest merger in the media sector between Time Warner and American Online. He was then called to become chairman of the board of Citigroup in the time of most difficult financial crisis. As today, as testimony of his ability to lead turnaround, he is the interim CEO of the Los Angeles Clippers. Richard is a wonderful person, in addition to a great professional, and is very involved philanthropically in several important causes. President Mario Monti, but as many of us remember him from our student days, Professor Monti, and then Rettore Monti. He is the Bocconi professors closest to our hearts. Professor Monti served as the Prime Minister of Italy and Minister of the Economy and Finance in the wake of one of the most severe debt crises in Italy. We all, alumni and Italian citizens, especially those of us living abroad, will be always grateful to Professor Monti for accepting that challenge and allowing Italy to regain its credibility in the global capital markets. Professor Monti, in addition to the historical impact that has made and continue to make to our country and to Europe overall, is also a wonderful example of the perfect alumnus who dearly loves his alma mater from the first moment he entered as a student through the several roles he has continued playing throughout his career. As the representative of many alumni in New York, we cannot be more honored of having Professor Monti here with us for this final session. Thank you.
Okay, well, thank you very much. Welcome. The introductions have been made. I'd like to start right away by picking up a couple of the issues that have been debated today, during the day, and maybe trying to put them in perspective so that we can use some of those issues as a closing session, as a proper closing session. Now, Mario Monti and Dick Parsons crossed paths before a few times. Once, many years ago, when Mario Monti was commissioner for competition in Europe, and Dick Parsons was chairman of Time Warner. And there were two instances in which Dick Parsons had to go to Brussels and ask permission for a merger. And the first time was for the merger with Time Warner and AOL, AOL.com. And the second time was for the music business, for a merger with EMI. Now, what happened was that Commissioner Monti approved the first and denied the second. And I already see a little, exactly, already, retrospectively, I think that there is a bit of disappointment. So maybe I'd like to have a very quick opening statement on this so that we settle the case, because it's the first time that we talk about it. So, Dick, were you surprised or disappointed retrospectively that that the AOL deal had been approved. And
That's an unfair question. No, I think
I'm here to ask unfair questions.
I think Commissioner Monti got it right on both counts from the European competitive perspective, but I wish he'd given me the other and stopped me from the former.
And Mario, can you tell us why you decided that music was dangerous and AOL was less dangerous?
But I understand the wish
Yes.
in retrospect.
It was a little
may
wicked what
perfectly
you've
be
done.
the
Yes.
reverse. No, we thought, first of all, on AOL Time Warner, which goes back to 2000, and which was by far, at that point in time, the largest merger in history. AOL had spent $183 billion in cash to secure Time Warner. And it was not, however, from the point of view of competitive harm to the market, a dangerous merger. So we interacted quite well with our American colleagues, the Federal Trade Commission, and we came to the conclusion that the merger was to be authorized. In Europe, I remember, but please correct me, but this already denotes our keen interest on the music business at that point in time. We decided to ask for, and the two parties decided to accept this request, that AOL rescind their relationship with Bertelsmann, and that Time Warner should have, as they did, stopped their plan of a joint venture with EMI. So now the successor to Dick, I think, turned the qualification biggest merger in corporate history to, I think, the biggest mistake in corporate history. I don't know, it's not for the competition authorities to judge, that is for shareholders, but we do, I and my successors in Brussels do stay on the point that that was not creating harm to consumers, whereas we were not entirely wrong either to deny to you what in retrospect you wanted most, were we?
No, but that's why retrospectively you can't evaluate these things. The entire music business changed so dramatically during the first decade of this century that the landscape just changed right from under us. May I tell one funny story, though?
Yes, please.
Europeans being naturally gracious and diplomatic. Commissioner Monti did not say, no, you can't do it. He said, you can only do it under conditions. One condition was we had to offload or trade away, dispose of one of the recorded music parts of EMI, which was called Virgin Records, which is a big record label. But so we got there on that. We finally convinced the EMI guys to do that. And then they said, and you must give up some of your music publishing rights as well. And so I said to the commissioner, I said, well, what did you have in mind? And they looked at all of the music rights that we had, and they said, you have to get rid of the Motown music publishing. Now, you can't say that to an African American, right? I said, Motown, we have no deal. And that was it. It broke.
Well, and then the deal was off. But your path crossed indirectly on another occasion, right after the crisis. You were in charge of Citi, you were the chairman of Citi, which was going through a very rough time with $2.5 trillion in assets, and Mario Monti became Prime Minister of Italy when Italy was in a very rocky moment with its own debt and was losing confidence in the market. And I remember those days. It was really one of the toughest moments for Italy with a $2.5 trillion debt. So I'd like, considering that this morning there was a bit of a chat about what happened and the differences between Europe and the United States, and those were more theoretical approaches, I'd like to move into a debate or a discussion with you that have been exposed on the front line. You were there working, and Dick Parsons not only as chairman of Citi, but as an advisor of President Obama. And I seem to remember that one of the key points was in 2012 with the Camp David G8 summit, and then right after that, the G20 summit in Los Cabos, which was pivotal in changing the atmosphere. Right after that, in July, then the European Central Bank with Draghi started to loosen up a bit. Mario, can you tell us what you recall about those days, about the conversations that you had with the other leaders, with President Obama that wanted Europe out of austerity, and Chancellor Merkel that was insisting on austerity?
Well, when people ask me, but do you really think the G8 and the G20 are still useful? I say I'm not sure, but what I can tell you is that what goes on in the margins of those meetings is for sure very, very helpful. And in fact, with some institutional brutality, the President of the United States, at the conclusion of the official day at Camp David, invited Chancellor Merkel, President Hollande, and me to his chalet, to his apartment after dinner, and we spent 2.5 hours there. He, for some reason, had not invited the President of the European Council and the President of the Commission, who were at Camp David, and who were not extremely happy the following morning. But I must say that there I saw President Obama vigorously committed to interfering in the positive sense of the word with the dynamic of decision-making among European leaders. And when I first, a couple of months earlier, went to visit him to the White House, the first question that he asked me was not so much how far have you gone in redressing Italians' public finances, but I understand you go on discussing quite productively and well with Chancellor Merkel, but could you tell me how that is possible on economic themes? And I remember my answer was, yes, never forget that for Germans, not just for Angela Merkel, economics is still a branch of moral philosophy. So you're not going to unchain or change her by becoming Keynesians, but by arguing that Germany too should do something that, besides creating demand in the short term that they do not like at all if it is publicly generated, will add to productive capacity and virtue in the future. But then, and then I conclude, for several months, President Obama was really a great facilitator in the dialogue. He and I and President Hollande had some commonalities of interest there, of course, and he would not hesitate also to call us, I believe, certainly to call me, between one European Council and the next, and to ask for advice on who he should call and saying what, always very discreetly. In Los Cabos, I want to mention this because a key person who had a role there, although not being there, is in this room. Los Cabos was the culminating point in the dialectic among Europeans and President Obama on selling the merits of the so-called anti-spread mechanism. This is something on which the then Director General of the Bank of Italy, Fabrizio Saccomanni, thank you for coming here, Fabrizio, today, had worked analytically for a number of months. And he was the intellectual support of my government on this particular point. And as Peter Spiegel recounts in his articles in the Financial Times, Los Cabos was the moment when, in fact, President Obama endorsed the Italian position expressed in that document, but in such a convinced manner that one lady head of government from Europe was not exactly happy. But then, between this and June 2012, further work, further negotiations, tough negotiations, but the result is the one I mentioned this morning. President Draghi could not possibly have put in place his statements and the OMT if we had not achieved a very, very difficult to achieve political consensus in the European country. So, America is a very important member state of the European Union.
More happening in Europe. What is your recollection from your side? You know, what was going on in the White House when you were getting together with the president, advising him on what to do with Europe and with Germany? Does it coincide? Did you discuss moral philosophy with the president?
No. And I think just like the very much appreciated, but probably wrongly directed attempt to sort of say, well, Dick and Mario sort of came together at this time of crisis. You know, chairing Citigroup, while it was an important financial institution, certainly on the global stage, is nothing comparable to managing the affairs of a nation. And so I don't really recognize that. I want to pay public tribute to what you attempted to do, particularly in terms of the structural reforms. And we'll come back to that, I'm sure, later on. But similarly, the president used the group that he put together to help him think through things to stimulate U.S. economic growth as opposed to help him sort his way through kind of global coordination of approaches. And, you know, but as I thought about the question that you put to us yesterday, I don't think it's so much that there was a difference of, at the end of the day, of approach. I think there was a difference in timing. You know, in 2008, 2009, the perception of the Europeans, my sense was, from the point of view of a banker who had lots of exposure to those markets, was that the Europeans and much of the rest of the world were looking at the financial crisis as a US-caused, housing-related set of catastrophes. But it was basically, you know, it found its root here, and the US was sort of exporting this catastrophe to elsewhere around the world, and they had a perspective that I think austerity and just kind of pulling up the fences a little bit was all they needed to do. And then the full force of this hit Europe in the 2010-2012 frame when the markets really sort of declared that the problem was that assets of all kinds had been just mispriced by the marketplace. Those values came down, and the banks in Europe had the problem that the banks in the US had ahead of that, namely being undercapitalized or in some senses bankrupt.
But your bank, with other banks, you were selling European bonds and Italian bonds. Were there contingency plans for a breakup of the euro? I mean, the situation was very dramatic at the time.
It was very dramatic at the time. I mean, and it's even now it's hard, I think, for people to really speak about how things could have gone very wrong, and the wheels of finance could have just seized up globally. But most of the focus wasn't around, at least in Citi, around the potential, you know, collapse of the euro, but it focused on what are called by different names. I call them the Club Med countries, some people call them the GIPS, Greece, Italy, Ireland, which of course isn't in the Mediterranean at all.
Club Med is sweeter.
Yes, yes, it's nice. It sounds
Rather
better.
than the pigs or other terms.
No, that's a bad word. I didn't say that. You did. Yes, we don't. We never use that term. So there was focus, even at the board level, and a lot of it was instigated by the Fed, on our exposure to individual European countries. Citi had a lot of exposure in Italy, for example, a lot. France, not that much in Greece, although that got a lot of attention because it looked like Greece was.
And do you remember how much, more or less, you sold of Italian bond holdings back then? Or how much you reduced the portfolio? We heard 40, 50, 60% sometimes.
Yeah, I can't give you a number. I will tell you that there was a concerted effort by our bank and the other major money center banks here in New York and the U.S. to limit and attenuate exposure to the troubled countries or the presumed troubled countries in Europe, in part because the Fed was putting pressure on all the banks to offload risk, is the bottom line. So I think, to get back to your original question about sort of austerity versus growth, feeding the economy and stimulus, the U.S. got a quicker jump out of the box because the diagnosis here, even though it was focused on real estate-based assets, was that we had to do something to prop up the banks and to then stimulate the economy. And I don't think the full force and the full dimension of the global financial crisis hit Europe until 18 months later.
Mario, then you were a great moderator between Germany and Europe and the US. I mean, I remember back then everybody had a cover of Time magazine, and you were certainly a big facilitator into this. And yet...
facilitator out of necessity, because if that facilitation had not succeeded to some extent, moving a little bit Germany, my country would have gone down. I believe the country of many of us, the Eurozone, and President Obama was in an electoral year, so that's one reason.
The pressure was on for everybody, yes, absolutely, but a survival in a way for everybody. And yet, a year later, in 2013, the US came out outspokenly with a Treasury report that pointed out that Germany was not helping. And it was the most explicit accusation that the US had against Germany. Germany had a trade surplus of about 7%, and the US was really very aggressive and basically said, if there is a system of 18 countries and only one is growing and the others are in recession, then there is something wrong with that system. What do you say to that?
That will not have and did not have a huge impact on German thinking and policy. Why? Because in the meantime, they had turned the attention and the attention of all of us on productivity and competitiveness. And there it is true that to increase competitiveness within a given area may appear to be a zero-sum game, but the more each Eurozone member state improves its competitiveness, the more the Eurozone can grow externally also. This is something that I'm not sure President Obama fully realized. Let's say the moral authority of the US, the UK, of the Anglo-Saxon model was terribly, terribly diminished because of the financial crisis. Because it is true that Europe was far from immune from the financial crisis, but there was the consensus in Europe that the generation of the financial crisis had much to do with the Anglo-Saxon model, so that Germany felt being on a moral high ground, both because of its less reckless financial system, and because, from the point of view of the real economy, it was the country which was doing best in Europe. Nevertheless, I welcome the fact that the US put all that pressure on Germany, but it was a Germany quite strengthened in their own awareness of their particularly strong economic position.
But besides not convincing Germany, what is your thinking about that particular statement? Meaning, if one country is doing well and the other 17 are not doing well, maybe there is something wrong in the mechanism. What do you think about that?
I think that there was something wrong in the mechanism. It is still there. It may be modified in due course. And that is, in my view, I'm still convinced, not so much a negative macroeconomic behavior on the part of Germany, but some shortcomings in the overall policy framework. This morning we discussed public investment, and I believe that the policy framework of Europe is not yet recognizing sufficiently the role of public investment. And then also Germany now has even officially the need to recognize that it must do something at home, because the European authorities have opened the so-called procedure for macroeconomic imbalances, and there are remedies that Germany should apply for its own well-being and for that of the others, in particular to proceed to a much stronger liberalization and opening up of its domestic services market. So I think it's more than the locomotive macro recipe that usually does come from the US onto Germany.
So just to pick on this last thought you had, the way forward to growth. You mentioned Germany. What about Italy? And Dick, what about Europe? If we can have a couple of minutes each about what's happening, what's going to happen, what is the best way to try to regenerate growth, which is what everybody wants, and which we didn't answer completely this morning.
Well, at the risk of being shown to be sort of shallow when President Monti gives his response, I would tell you my perspective, because I think it's not just a risk for Europe, it's a risk here in the US. I mean, there's growth, but the growth is tepid. And as a good friend of President Monti wrote in today's Wall Street Journal, the growth is favoring capital and assets, not labor and productivity. And it's because I think Europe and the US have to engage in some structural reforms. You tried to do this. You started doing this in Italy in terms of the way in which, you know, where the money is sopped up and where it's sopped up in unproductivity. So, for example, I'd say all the Western nations have huge problems, structural problems, in terms of looking after or preparing for people in their retirement years, right? You've got huge, big populations moving into frankly, the unproductive parts of their lives, and ever-increasing amounts of the resources of a nation targeted at that group, and not going to sort of productive infrastructure kind of rebuilding sorts of things as opposed to simple consumerism. I think those things have to be attacked so that resources can be redirected to more productive uses. In this country, which I have more familiarity with than Europe, and you can see it, you're in the right place to see it. You know, our infrastructure is crumbling. what can government do? I mean, government can't really create permanent jobs. They can't create jobs that are sustainable, but what they can do is create an environment where the private sector can then come and create jobs on the back of communications infrastructure, transportation infrastructure, power infrastructure, all of those things that need to be maintained and modernized. We're not doing that. We're channeling too much of our resources into things that, frankly, in my view, and in the intimacy of this room, as they say, are productive of votes for elected officials, but are not productive of creating an environment where growth can happen. The second thing I would say is, again, and this is from the perspective of a banker, and it'd be interesting to get your take on this. There is a healthy tension in financial systems around the world between the regulatory arm, right, which is focused on safety and soundness, and the political/policy arm, which is focused on creating fund flows that enable and support and promote growth. Sometimes that balance gets out of whack. So for example, here, and I would submit in Europe, for the first half of the decade of this century, from say 2000 to 2006, the public policy arm, which was promoting sort of credit and free flows of funds, overwhelmed the regulatory arm. And so money was not only available for growth, it was too available. Credit was too easy for people to get, because we had, in this country, the Congress saying everybody should have a home, lend them the money. They created an environment where these subprime loans, they said that Fannie Mae go out and buy them and put them on your balance sheet. Everybody should have access to the good life, and everybody should be able to live, without saying it this way, on credit. Then we had the crash, and what happened was the seesaw went this way. The regulatory arm got the upper hand, because now these guys had messed up right on this side, and they just shut everything down. That's how it felt like if we were a bank. You couldn't put money out because the regulatory reaction was, no, safety and soundness is the rule of the day, and they shut down the credit flows to the very institutions, companies, and people you need to create the growth, to create jobs, and to create prosperity. So that has to come back into balance, and that's just going to take time. It's coming back into balance, but it's still not there yet. So I think we need to be clearer on prioritizing the allocation of our resources to productive uses as opposed to non-productive uses, and we've got to get the banks back in the business of doing what they're supposed to do, which is making credit in a responsible way available to businesses and individuals so that you can have growth.
Thank you.
I found that.
And I'm sorry, I just would like to say, if we can keep the answers short,
Okay.
because I'd like to cover some ground. Thank you.
I very much subscribe to what you say, this view of the regulatory arm and the policy arm. And I would say that from this point of view, one interesting difference between the US and the EU, in my perception at least, is that these movements tend to be even more cyclical in the US than in Europe. I remember, for example, the Bush years. There, from the point of view of regulation, from the point of view of monetary policy, from the point of view of the SEC policy, but also from the point of view of antitrust policy, there was a sort of well-concerted deference, if not genuflection, of the public policy power to the corporate power. And even one important attenuating circumstance, for example, in the ruling of the Department of Justice on the Microsoft case, they were, during the Bush administration, they were so permissive, also because, said the ruling, after September 11, we have to maintain a climate conducive to growth. Imagine in a ruling of an antitrust authority, but that was a factor permeating the whole of the society in the US. In Europe, because the policies are the result of a complex of forces, 28 or 18 member states, and national elections do not coincide on the same day for everybody, etc., there is more inertia, less promptness to act, less cyclical movements in policies, maybe less probability of making mistakes, but more probability to be late systematically. But can I in turn put a question on growth? One factor that would contribute to growth both in the US and in Europe, according to many, is the TTIP, the Transatlantic Trade and Investment Partnership. This is probably the most important policy challenge that our two parts of the world have to confront together. But at the same time, the most important political challenge that both of us have to face is populism, from the Tea Party to Marine Le Pen and so many others. Now, the fact is that nothing is more unpopular in the eyes of populists than integration and market opening. Populism and the TTIP tend to collide. Now, in your professional life, you have been a US and global leader, very respected one in areas, cultural products and services, digital services, financial services, that are amongst the most difficult targets of liberalization and opening up. How do you see the outlook for the TTIP? Are we right to bet on this on both sides of the Atlantic? Is it going to happen?
At core, that's really a political question, right? At core. Because, as you say, you can make all the arguments for the integration of markets and the freer flow of goods and services across boundaries as being good for everyone, as being good for the whole at the end of the day. But you call it populism, I would almost call it parochialism. People look at these things from a very narrow base in terms of what does it mean to me? And that then gets translated into, as opposed to what does it mean for us as a group, and there's also a short-term view, it gets translated into politics at the local level, but the way we're organized on this side of the Atlantic, and as you say, that very much more rapidly zooms right up the spectrum to national elections and how people look at these sorts of issues. So I think right at the moment, until, at least in the US, until there is more optimism around future prospects, and it's not just job growth, it's people seeing who has the jobs, because there are whole big swaths of this country where frankly, another area that, in my opinion, we underfund is the educational side. I mean, I'm sorry that these answers go on for so long, but I just spent a lot of time with a bunch of educational reformers doing something for the current governor. And the most interesting thing to me is some of the people who are really out in front of educational reform have understood that there is a great, they think of it as a robbery, but there is a great shifting of resources away from the current upcoming generations to the older generations. They are putting, in effect, they're borrowing, they're spending the future of younger people. And what's happening is those younger people aren't able to get jobs. And they're seeing many of the jobs taken by people from outside the United States and so on and so forth, which is why we have this great immigration issue in the country. And so it causes them to become even more parochial. That translates into politics. That's why you have a Tea Party and these less than enlightened, I would say, and certainly non-global thinkers. And so I'm not sanguine about the prospects of TTIP in the short run.
Thank you, which brings us to, in a way, to the role of capitalism. We have about 10 minutes, and I'd like to address two final issues, and then we'll open up to the public. There's been a debate more generally about the role of capitalism and whether capitalism can change and can be more inclusive and can give back to the middle class. There was recently in London a big debate about this. And one of the issues is that the markets are pushing corporations for short-term results, and now corporations have to react and try to look long-term. Everybody should start to look long-term. How do you see the development, both of you, of a new capitalism, which would be more in tune with what we need these days, with innovation, technology, and so on and so forth? President Monti.
To me, it's an even wider problem. It's short-termism everywhere, in business and in politics. And this is the biggest challenge, I believe, to our societies, to our democratic societies. And I think it has to do with the media, with the incentives to which politicians are submitted, but it's obvious that as the complexity of solutions grows and as the time space between application of a policy measure and the expected benefits increase, there would be a need of more and more long-term thinking and decision-making in politics and business, whereas the trend is everywhere to shorter-term policy-making at the business and political level. Most hit by this is the very low and decreasing political and popular acceptance of integration, which is the most complex dimension of all. But now practically all problems cannot be solved without some international integration, etc. So I think we are in a very, very awkward prospect for democracies, the ability of democracies to deliver decently efficient solutions with the present incentives of the political class is very doubtful, and I will assert, but not give the argument at this stage, that in my view, the system of governance which is most afflicted by this new danger of inconclusiveness is precisely the system that we were brought up to think that was the most efficient, that is presidential systems and presidential republics, of which we have two most eminent examples, one in this country, the other one in France, two countries which, with differences, are not perhaps right now the most performing in terms of willingness and ability to take up the really decisive long-term challenges, whereas other systems which are a bit more gray, like the German system, but even the Italian system, do allow for joined efforts of a bipartisan nature, of a grand coalition, which at least by spreading the political costs over wider shoulders, do allow a reduction of the net political costs and therefore may be more inducive to politicians doing something that is necessary for the long term and not just for the next elections, but this is going far away.
which brings us to the fourth point, but I'd like to hear from you very quickly. How do you deal in the boards? And then I will ask you a question related to that.
I don't think it brings us so far away.
You are in many boards.
I think the issues that you're raising really relate to leadership. Leadership, I mean, and one has to look pretty far and squint one's eyes to find glowing examples of enlightened leadership as opposed to understanding and following the polls, what will people like in the short run. I think the issue you're putting your finger on, though, is it's related. Right now, the return on capital, on assets, is just greater than the return on labor. And so people who have assets and control assets are sprinting ahead of those who just labor and toil for a living, and the barbell is getting stretched and the middle is thinning out. And if that continues, that's a problem. And central bankers around the world really can only, I mean, they can deal with the valuation of the asset side, but they can't deal with the investments that are necessary to make labor more productive. And until you have some leadership at the heads of all of these nations that understands that and that's committed to the long-term investment strategy, it's not going to get better, and it potentially gets worse.
Thank you. I'd like to pick on the point that Mario Monti brought up as a closing statement for both of you, and then we'll open up. I thought it was very interesting what you said. It's part of the current debate. A book just came out called The Fourth Revolution by John Micklesway, the editor of The Economist, and Adrian Woolridge, who also works for The Economist. Basically, the reasoning is that the West was able to move forward because of leadership and because of a state that was functioning incredibly well. And they identified three big moments: the nation state, the liberal state, and then the welfare state. Now we are into globalization, and there are challenges from China, from India, which in the end will also threaten certain political models. What you were debating was a sort of a Western model, you know, presidential, but people are debating also democracy. So do you whether democracy is efficient or whether, you know, the Chinese system is more efficient? So we all say that the state is wasting our money, but an efficient state is said to be key in these particular books and other books for growth and for the challenges, for taking up the challenges in the future decades. Very quickly, do you think that that is an issue that we have to deal looking at the future?
Absolutely. Absolutely. In the three phases that you mentioned, I haven't read the book yet, I must say, but I'm sure that they, being from The Economist, they will also have analyzed the effect of globalization, and maybe it's simply the fact that the Western societies have had to give up a huge part of their rents that they earned from the rest of the world before globalization came in. And we are still in the process of adjusting our welfare systems to a leaner regime because we don't have all those rents that were possible when a large part of the world was with much lower standards of living. But I think the problems of the markets and the problems of politics have mostly been dealt with separately. Now I think we are coming to a point where we need a comprehensive view, and that's why, Rector Sironi, I strongly support the moves of Bocconi towards integrating its traditional fields more and more with the public decision-making, the public policies, and all that.
Yeah, clearly, we're going to evolve to a new place. Exactly where that new place is, I don't know. Although as I look around the world and did business around the world, I see a kind of homogenization. I mean, I see just like markets have come together, and it's really a global marketplace now, forms of governance are converging, not flying apart. I mean, the Chinese are communists like I'm a Martian, right? I was in Vietnam recently, and you want to talk about a market economy and a bunch of hustlers who are just out, you know, trying to create wealth for themselves and their family. I mean, you go to some places in Southeast Asia, and they're sprinting down the same roads we sprinted down, you know, 50 years ago. And they're sprinting at a pace they're going to catch up soon. So I don't know that it's, you know, sort of state-planned economies versus free market economies. It's a form of organization that we have to get to where incentive, individual incentive, the incentive to create, the incentive to be entrepreneurial, the incentive to innovate, all those things are maintained and if not revered, respected and rewarded, but there is more, to use your word, integration and coordination of how the aggregate productivity of all that is then, I won't say redistributed, but reapplied across the base. And we aren't there yet, but I think when we do get there, capitalism will be at the base of it. But there'll be a more enlightened, you know, sort of allocation of society's bounty to go to the places that will keep the wheels turning.
I'd like to close, and I'd like to have you a closing statement each, a minute each, and then we're done, with a sort of a more lifting, little bit more optimistic tone so that we can close on a positive note rather than worrying about Mr. Putin or other issue. Is there a positive note that you can find just to say goodbye to this lovely public?
Yes. Mr. Parsons and I met 14 years ago over a couple of mergers. Our views did not coincide completely, but the merger of mind that I detected today is much stronger.
Thank you. I take that as a compliment. Yeah, I do think this, notwithstanding the fact that, as President Monti says, the world's just a far more complicated place, and so thinking your way through problems and solving problems is a more complicated exercise and requires more coordination across borders. All that said, the world is actually a safer place than it's ever been. And I do think there is a convergence of economic and governmental models that is going to not proceed without bumps, but ultimately result in more inclusive economies and greater prosperity for more people.
Thank you. Please, big round of applause.